Hi, this is Brent Grover from Evergreen Consulting, speaking to you today for Advanced Supply Chain Solutions, powered by IBIS. This month's blog topic is adding services that customers will pay for, in other words, value-added services. And just a quick recap from where we were last week, what value-added services are, the definition here, services that add costs, unfortunately, but not revenue for most distributors. Customers say, why should I pay for something that I can get for free, or that I used to get for free, or that your customers don't charge me for? And the question is gross margin the only way to get paid for distributors? So let's start from the fact that we have trouble getting paid for value-added services, and what they usually are. It depends on the line of trade. There are some examples on the screen for different trade lines explaining in a little bit more detail of what value-added services might mean. But it's a very open-ended question. There are lots of different kinds of ways to add value to the products that we sell to our customers. So what value-added means, a classic definition would be a customer places some value on it. Now, how do we know that? Because they're willing to pay for it. And typically, we distributors want to be paid for our services either through gross margin, which would be bundled, or unbundled, meaning we charge separately for the services apart from our products. But it's harder to do that for most of us than we'd like, so we have a tendency to try and bundle our service pricing into our products, and unfortunately for many of us it's been a loser's game historically. So value-added service criteria, well, what are they? Here are some examples. They have to be valued by the customer naturally, profitable for us as the distributor to provide those services that are scalable, meaning we can broaden the services or provide them for even larger customers on a bigger scale. The services are transferable from one customer or one type of customer to another, and hopefully those services are not too easy for our competitors to duplicate. So three approaches we can use. We've been talking about each one of these. Today we're going to talk about the third one, but the first two were just copying what our competitors do. The second is more reactive, meaning we just give services away in order to try and hang on to our customers. And then finally, innovative services for creating value for our key accounts. So let's go on and talk about extra services as a defensive measure, which is the sort of the second alternative. So we have a customer that we're in trouble, and we're trying to salvage that account. And one of our options, instead of cutting prices, is to just provide more services. Perhaps to provide those services at no extra charge, which is where we fall into that trap. It's another reactive way to develop services instead of a process to create valued services in response to an opportunity to help a customer make more money, make us a more valued supplier. We're trying to hang on to the business by providing some services for free in most cases. So it's an alternative to cutting prices. It definitely adds value to the customer equation, but unfortunately for us as distributors, it's hard to get paid for those services. So again, if it's reactive, not a process, if you will, but just a knee-jerk reaction to situations, I've broken them down in some types here, three different kinds. One is financial. Some examples of value-added services in a financial context might be offering deferred payment, or carrying custom inventory for customer, or offering inventory in a consignment program. Each one of those increases our asset base, but does not increase our profitability because there's a cost of carrying assets. In the case of labor-intensive type value-added services, some of those might be examples like I showed you a few slides ago, converting services, repackaging, that sort of thing. Logistics value-added services might be remote warehousing, third-party logistics, maybe same-day delivery. We see Amazon's recent exhibit A on 60 Minutes was helicopters in a prototype making deliveries. JIT, which is a little more familiar to us, just-in-time delivery. And then finally, a fourth type of value-added services might be, in the case of information technology, IT value-added services could be some types of web order entry systems that we create, perhaps a web catalog for specific customers, EDI, and that sort of thing. So those are various value-added services that we We have the capacity to add, perhaps, again, in a reactive sense. Unfortunately, we raise our costs, we don't get paid for them. So some questions to raise in connection with cost to serve, and this is something we're not very good at measuring, unfortunately, most of it, which is we need to understand what our inventory carrying costs are. Before we add more inventory for a customer or customers, we need to understand how much does it cost us to carry inventory. Unfortunately, for most, it's more than you think. We don't track our labor costs very well, and when we add labor-intensive value-added services, we often grossly underestimate the cost of the labor that we're providing. And finally, we fall into the trap of marginal costing. The marginal costing would be where we look at only the additional cost when we price out a service or cost out a service for our own internal knowledge. We don't take into account an allocation of overhead for our company. And again, that's a very short-term way of thinking. So just to wrap this up, the challenge that we have in the creation of value-added services is, again, that we are very good at adding value. We're not very good at getting paid for it. We need to improve the process by which we create value-added services for customers, and we need to understand our costs better. We understand the value we create for our customers pretty well, but we don't understand our own costs. So next week, in the final installment of value-added services for our monthly discussion, we're going to get into a more enlightened, if you will, way of creating value-added services that better meets the criteria of creating services that are valued by customers, that are profitable for us, that are scalable and transferable to other customers, and finally, that are not as easy for our competitors to duplicate. So until next week, this is Brent Grover from Evergreen Consulting for Advanced Supply Chain Solutions powered by IBIS. Thanks.